We have taken measures to control the demand for gold, and I am happy to say they have had some effect. Gold imports declined sharply in June, and I hope they will stay at normal levels from now on. On petroleum products, we began a process of correcting the prices of petroleum products last year. The gradual correction that was taking place in diesel prices had reduced the gap in under-recoveries from almost rupees 13 per litre to less than rupees 2 per litre. Unfortunately, some of this has been undone by the depreciation of the rupee. However, our policy of adjusting prices to progressively eliminate under-recoveries remains and in place. On the supply side, we need to push our exports. The depreciation in the rupee will help. Of course, there is a time lag before this benefit will be felt in terms of export volumes, but orders being booked from now on would certainly benefit. We are also trying to remove the constraints in the export of iron and other ores, which saw a considerable decline during the last 1 year. The Reserve Bank has done its bit to stabilize market expectation. Initially, it injected dollars into the markets. This helped to some extent. More recently, it took additional steps to raise short-term interest rates. These steps are not meant to signal an increase in the long-term interest rates. They are designed to contain speculative pressure on the currency. Once the short-term pressures have been contained, as I expect they will be, the Reserve Bank can even consider reversing these pressures. Looking ahead, the rupee depreciation will help Indian industry to compete effectively with other countries, both in export markets and against their imports in our market. I hope industry is thinking seriously of how to become more competitive. It is because we are confident that it can that we have entered into comprehensive economic partnership agreements with the ASEAN countries as well as the Republic of Korea. We are hoping to conclude a similar agreement with the European Union soon. Ideally, we should bring the current account deficit down to 2.5% of our GDP. It is clearly not possible to do this in 1 year, but I expect that the current account deficit in 2013-14 will be much lower than the 4.7% level recorded last year. It will decline further next year. We will use all policy instruments available, fiscal, monetary and supply side interventions to ensure that the current account deficit declines further over time. Ladies and gentlemen, looking at the medium-term prospects, I feel we can and we should remain optimistic. The basic fundamentals of our economy are sound and healthy. We have been taking all possible measures to correct imbalances on the macro front. The fiscal deficit, which is the accumulated effect of the fiscal stimulus given in the past, had expanded and it needs to be reduced. The finance minister has targeted fiscal deficit of 4.8% of GDP in the year 2013-14 and announced continuing reductions of about 0.5% each year subsequently up to 2016-17. We are determined to meet the target for this year. We also need to take steps that will revive the momentum of investment. A major focus of concern in the past few months is that many projects have been held up for various reasons. We have seen a very strong expansion in power generation capacity, but coal supply became a problem. We have now resolved this problem, and the fuel supply agreements are being signed, which will ensure that all plants that are commissioned by 2015 will have adequate supplies of coal consisting of a mix of domestic and imported coal. Many projects have been held up for lack of regulatory approvals. These are being expedited. A separate cell has been set up in the Cabinet Secretariat recently to identify big ticket projects both in the public and private sector and to see how they can be helped through various hurdles.